Okay, ladies and gentlemen, it gives me great pleasure to introduce Kamran Khan. He is from Infratech Capital, and he will be presenting to you now. Please welcome him to the stage. There we go, a bit of energy. Lovely. There you go, that's correct. Yeah.
Excellent. Thank you very much. Everyone settle down. Okay. We're going to talk today about infrastructure, and when I say infrastructure, we're not talking about internet infrastructure, we're talking about the real infrastructure, like roads, bridges, airports, water supply, things of that nature. And I'm going to talk to you about what's happening, what kind of disruptions are happening in this market, and how blockchains and various different technologies are going to change the way how infrastructure is provided to people like us, but perhaps just as importantly, how infrastructure is financed. You will see my bio a little bit in the background later, but I come from the infrastructure world. I have invested about $10 billion in infrastructure around the world in developing countries, and probably 2 decades of advising governments on how to develop infrastructure projects, how to get public-private partnerships in place, how to raise private capital. And I myself have gone back and forth between investment banking, working for the World Bank, working for various different international agencies. So this is, I guess, in some ways is also a positive story of how the conventional finance world is coming to blockchains and cryptocurrencies. I mean, my presence here. Let's start first with the basics. If we can get this thing to move. Okay, so this I'm supposed to make sure it's clear. This is not a solicitation of capital. We are going to be raising capital later. We're setting up a private equity fund, but we don't have the documentation in place yet, so I wanted to make sure that we get this thing up front. We're going to talk about what's happening in infrastructure, particularly in developing countries, but increasingly this is happening in developed economies as well. So 3 things that are really affecting things. One is the way that technology is evolving. It's truly, truly disrupting. So I'll give you an example. Up until about 10 to, I would say, 15 years ago, I grew up in Pakistan, but it's true for a lot of developing countries. If you wanted to get a fixed phone line in your house, it used to take about 10 years to 15 years to get a fixed phone line connection. So you put in the application, and then you wait, and you wait, and you wait. And why did it take so long? It took so long because the government had to wait for somebody like the World Bank or Asian Development Bank or African Development Bank, depending upon the country you were in, to say, oh, we're going to make a loan to you for telecom. Then you had to hope that the expansion plan for expansion of the grid, the telecom grid, would include your city. Then you had to hope that your district or your neighborhood was going to be included. And then you had to pay some government servant something or the other to make sure that your house was on the distribution map where the expansion will happen. In other words, it was an entirely public sector-led effort, and the decisions were made by the public sector, and the whole thing was one massive monopoly. Then came mobile phones. So all of a sudden, you had a complete disruption of that system. So no longer was the consumer just a taker. You now had a choice. You can, if you're in India, you can pick Reliance versus Vodafone versus if you live in any part of the country, even for us here in the United States, of course, we have, AT&T versus Sprint and so on. So the consumers got involved into the process as decision makers. Private competition came in, and the whole government structure that lived around that was disrupted entirely. There was no need for a loan for the government to take from a World Bank or anybody. There was no need for the public sector to prepare the project. There was no need for public sector to be part of the financing. I'm sure it would not surprise you to know that the same thing is now happening in energy. So there are lots and lots of millions of people who do not have access to electricity today for the same reason. For them to have electricity, the national grid in the country has to expand far enough to include their neighborhoods, their cities, towns, what have you. And for that, the government has to rely upon, again, the public sector-ish financing model to expand. And it's, again, a 3, 4, 5-year process, completely laced with bureaucratic and corruption issues. So now, when you look at solar technology, you look at other kinds of renewable technologies, you do not need that national grid. You can go and have what is called distributed energy programs. So you can just put in place a project. You have consumers who need the electricity. You can sign the agreement. And of course, you need licenses from the government. So it's not that the government's role is completely gone, but the government's role is not what it used to be. And this same thing is repeating itself in water sector, in very soon, even things like airports are going to come down to that point. So that's the technology story that I'm going to talk to you about a little bit. And of course, we know that with urbanization, this need for infrastructure has been expanding. So any finance minister's meeting you go to, any meeting of leaders or economic policy, number one issue is we need more infrastructure for economic growth to continue. Not just in this country, where we also have a need for infrastructure, but certainly in emerging economies. Nowhere is it more relevant than Asia. So Asia has a very, very serious demographic change happening. So a lot of people moving into the urban areas as well. There's global climate change for which new infrastructure is needed. And Asia is investing trillions of dollars per year on infrastructure. So as a market, we are talking about an area where subsectors, so you don't even need to talk about all of infrastructure or all of transport. If you talk about just one little piece of transport, it's in trillions of dollars. It's a massive, massive market. And as you can see, real estate also plays a key role, because when people come to the cities, they need homes. And they need homes that are efficient. They need planning for the cities and so on. Now let's talk about financing. So I mentioned to you technology, which is really determining how infrastructure is provided to people. Now let's talk about financing. The biggest bottleneck to development of infrastructure thus far has been financing, because no government, not even the government of China, has enough capital to finance all the infrastructure that the country needs. And we know in our country, for sure, we have a serious problem with not being able to come up with that kind of capital. So everybody has understood that for infrastructure to be built, we have to find a system to get private capital into what was traditionally public infrastructure projects. Well, that has become an issue across the world, because for private sector to invest, the projects have to be what is called de-risked, meaning you have to bring down the risk enough for private investors to feel comfortable. Blockchains, again, provide a very, very disruptive model to take out the government from the picture. So if you all are consumers, you need electricity, and I'm the electricity company, why do I need the government? I need the government to give me a license to operate in your town, yes. I need the government to make sure that I'm not defrauding you, yes. But that's about it. If you have the ability to pay for electricity, and I have the capacity and the ability to prepare a project that serves your need, we can do business together. And that's exactly the notion of blockchains and tokenization. So blockchains are actually ideally suited for infrastructure, or vice versa. Let's think about it. For tokens to work, you need to have steady cash flow coming in. right? That's how a token from an economic standpoint becomes very attractive to a holder. So you have steady cash that comes through that you can look, visualize, you can see that, oh, okay, all of you have electricity bills, you're gonna pay your bills. It's not very substitutable, meaning if I'm your electricity company, it's not gonna be that easy for you to switch from me to somebody else halfway through the cycle. So there is a lack of or limited substitutability, and there's a long-term contract. Again, 2 or 3 things that are key to a very reliable token economics, where you say, I can see the cash flows, I can see that there's a contract, a smart contract in this case, that buys me these cash flows for a very long period of time, so I can rely upon them and I can actually estimate what the value of those cash flows is. And I know that this contract cannot be changed because the substitutability is very low. The consumers are not gonna wanna change. So you have a lot of the economic elements of what makes a good blockchain work through a smart contract and what makes a good token, a valuable token associated with infrastructure. Here's what we are putting in place. So we're putting in place a private equity fund which will take multi-currencies, so including fiat, and we're focusing on 2 things. Technology investments, which are very similar to a venture capital model, which would be investing equity in startups that are developing technology platforms designed to disrupt the infrastructure market. Things like renewable energy and variety of building technologies, variety of software that make telecommunication a lot more efficient. And on the other side is the tokenization of infrastructure services. So there's a number of companies now who are operating in the infrastructure space, who are your electric, IPPs, which are independent power plants, so suppliers of electricity, suppliers of water supply, suppliers of variety of different infrastructure services. They're all sick and tired of the current financing model, because for financing of infrastructure right now, it's one of the most bureaucratic things you can imagine. Again, as I mentioned, the government has involved, the government has to take a loan from somebody, government has to provide a guarantee, government has to approve all the contracts. So these guys are saying, we don't want to go through that. We have consumers who want our service. If we can find a way to go directly to the public, raise the money, and provide the service, we should do that. And that's what blockchains represent. So there are a number of these companies that are coming to the market, and through our fund, we plan to do 2 things with those types of companies. One, when these tokens come out, we would be underwriting the tokens because we know the domain, the infrastructure domain, you'll see later, better than most people, because we've been advising governments for 2 decades on how to finance infrastructure, how to build infrastructure projects, and how to put in place the right policy that attracts private capital. Second, some of these companies know infrastructure, but they're not very comfortable with what the ICO process would be, and then what, in a tokenized model, what adjustments they will have to make to their businesses. So I'll give you an example. Let's say you are, again, an electricity company. You right now send a bill to your consumers. It's very simple stuff, not that simple, but you know what it is. When you convert that into a token, there's going to be a lot of changes that have to be made, as we say, under the hood, into the details of how you bill, how you provide, how you report, how you monitor the provision of your service. So lots of sort of get your hands dirty kind of details that every business will have to go through. So our plan is that we are in very good position to advise these companies on how to do the technical stuff, but then also to help them interface with the governments. And we're not consultants, so the plan is that if we assist some of these companies, we'll be able to underwrite those tokens and get those tokens at a discounted price. So the summary down below, you can see two types of investments. One is very traditional equity, but only in the infrastructure space. And we have already a pipeline of pretty top-of-the-line Silicon Valley companies where some very, very well-renowned VCs are already in their companies, meaning they have already invested. And then on the other side, you have basically tokenization of infrastructure services where we would be investing. This is me. I'm not going to go over it, too much detail, but you can see we have been doing this as a team for decades, and we've very, very good contacts with all the governments, certainly in Asia and other developing countries. And I'm talking at minister level, heads of state, heads of utilities, and so on. And we've invested a lot over all these years. So we know the infrastructure space extremely well. Here's our geographic reach in terms of our experiences. As you can see, again, all over the world, certainly the developing world. Just to give you a quick sense, we have already built a methodology for how we process the transactions. This is for the equity part that I mentioned, equity in technology startups, looking at infrastructure. And then we have a similar one for the infrastructure blockchains. Here's a sample of the pipeline for the equity deals. Again, all of these are companies out of Silicon Valley. They all have very well-renowned equity investors already, different VCs, very established VCs. And our interest and their interest in us is because most of these companies want to expand in emerging economies very, very quickly at an early stage of development, not when they are in, C round financing. These are all A round financing stage companies. Here's some examples of the kind of blockchain, infrastructure blockchain companies that are really coming to the market. And you can see all kinds of infrastructure is now being converted to blockchain. You will see this. It's already, we're aware of many, many companies that are already preparing these things. So you will see probably by next year a number of these ICOs hitting the market. And they're coming predominantly from developing countries, sort of middle-income countries where people have money. It's not that this is not an affordability issue. The lack of infrastructure in the world, let me repeat, it's not an affordability issue. It's a provision issue. I used to advise the G20 on infrastructure finance. I advise Asia Pacific Economic Cooperation, ASEAN, African Union. Number one issue with infrastructure, why we don't have enough infrastructure in the world, it's not because people cannot afford the infrastructure. It's because we, as a society, have not come up with a good enough model that allows infrastructure to be provided. But with technology, we now have a chance to do that. Just like I said, the phone versus the mobile phone. And with blockchains, we have a way to now actually circumvent the financing problems as well. Here's the structure of the fund. We're going to raise the first fund, not a very big fund. We wanted to keep it low because we want to make sure that the token, this would be a security token, and we want to make sure that the security token is trading well above par value. So the security token will be tied directly to the asset value of the fund. As I mentioned, we're looking to raise from different currencies. And right now, the thought is that it'll be 50-50. 50% of the investments will go into the equity, and 50% will go into the blockchain, the infrastructure blockchains. And you can see the investment size for the equity is about 1 to 2 million, A round financing. And then you can see the returns. The economics are very standard, 2% management fee and 20% carry. We are going to be doing the fundraising when we are ready in Asia, of course. The company's based in Singapore. So we'll do Asia. We're going to register in the UK for the EU. And we will be doing a very specific kind of fundraise in the US, which limits the number of investors. here's the summary of everything. So the company is in Singapore. The team comes with the domain knowledge, and then the investments are in 2 areas. And finally, the plan is to change the way infrastructure is not just provided, but also financed. I'm happy to take questions. I'm good on time? We've got 5 minutes. Okay, 5 minutes. Perfect. Yes, sir.
You said you raise funds in years. What type of mode you try to raise funds here?
I'm sorry, what?
When you're raising funds in
Yeah.
years, what kind of mode do you use?
No, it's a specific regulation. It's called Reg D 506C. So it's a particular type of SEC regulation which says you can raise money in the U.S. and if you use that particular approach, you're limited to 100 investors from the United States.
That's called 506D?
It's Reg D, Regulation D of the Securities Act. Yes, sir.
I'm trying to understand the purpose of the firm is to match the capital which is provided by the investors to the startup companies that are already doing work, including the infrastructure.
Right.
So the question is, how do you get comfortable with the companies that are providing these services that they will indeed deliver on their promises?
So let's put it this way. What is asset management, right? When somebody raises a fund, what that means is that let's say if we were all investors and we thought, infrastructure is going to be the next hot thing, which by the way, I think it's going to be, okay? So if you say, well, infrastructure is going to be the next hot area to invest, and then you say, but we don't know anything about infrastructure. So should we go out and start investing ourselves? Or maybe we find Infratech Capital, these guys actually know infrastructure and they know the region where these investments are happening. So we give them the money, let them manage our money. They charge a fee, but then we have experts investing, right? So that's what this fund is designed to do. It is designed to raise money from people who are looking at infrastructure, recognize that it's going to be the hot thing in the next few years, and want to invest and want to ride that wave, particularly with the blockchains coming in. So that's basically the idea. And what we're doing here is we are making 2 types of investments. One is in the tokens of infrastructure companies. The other is pure equity. So if you're a crypto investor, you have 3 types of assurances. One, you're going into a very conventional business. You're going in with a team that actually has 80 years of experience amongst us in that domain. And your investment is going into real equity as well as the tokens. So when in terms of your fallback position, if you buy equity in a Silicon Valley startup, no matter what happens to the Bitcoin, your investment is still there. You have bought X% of equity in a company. So that's one set of assurance. Second is, if there is let's say power company that issues a token, who do you want to have on your side to evaluate whether the token is priced right, whether the underlying business will actually make sense in the country where they want to do it? You need somebody who actually knows infrastructure. So that's what we hope to provide, and we wouldn't be, with a $75 million fund, the first fund, we wouldn't be funding all of these deals, but what we hope to do is to be the benchmark player. So if there's an infrastructure deal, even if we buy 3% of the tokens, we will set the price. So if we are in, then a lot of other investors will say, these guys know infrastructure. They must have done due diligence on the business model of this company. And if they're buying 2% or 3%, this deal must be good, right? And then they will see what the benchmark is that we set up on the value of the tokens. Right now, when you look at these tokens that come out, honestly, it's good marketing, maybe name of the sponsor and some advisors. But very few people actually look at the underlying business. How well is the business developed? How long will they take after they have money to actually execute and all of those things? So for that, I think from field after field, you will see in the crypto world, people like us getting involved because people want to see that their money is managed by somebody who can look beyond the marketing, beyond the hype, and can actually look at the underlying business to see if that makes sense.
So, for the equity, I mean, for the allocation, STP allocation to crypto, the currencies, and also equity, is there a allocation to fixed income or
No.
none?
No, very, very focused. It's all infrastructure, either infrastructure startups, tech companies, or infrastructure-related blockchain tokens. Yes, sir.
Do you use technology for the allocation of the assets, the currencies?
Uh,
You sell it like a fund?
No, so we're not a hedge fund. We have no plans to make money from money. So whatever capital we raise, we are going to invest in these two types of things. We will have a very, very solid cash management program. So we're going to partner with somebody who's going to manage the cash while it's not being invested. And as you know well, secured so that there's no issue related to that. But the idea is not to make money from money.
And any technology that you're going to be using for the analysis of possible assets?
The technology we'll be using is, 20 some years that each of us bring on the in the sector. Yes, sir.
So for obtaining your tokens and participating in all of this, are you going to be doing, like, participating in initial coin offerings? Are you going to be going onto exchanges? I mean, how are you going to be storing these assets safely?
Yes, so the fund itself, Infratech Capital, will issue a security token, as I mentioned. We will have a fairly elaborate pre-ICO process to do pre-sales. And then at some point we will do an ICO. Yeah. Okay, last question.
Aside from what you stated in your thesis, what are like maybe 3 criteria you look for in these startup entrepreneurs to help you invest in them? And then what is your minimum investment deal? Do
Yeah.
you have LPs already?
We have some commitments, but we haven't started. I'm sticking to my lawyer's instructions here. So we have some commitments, but we have not signed LPs. We don't really have a full minimum established yet. I'm happy to talk to you about it separately. In terms of the startups, we are looking for probably 3 things more than anything else. One, we're not looking for one-off app if it's a tech company. So we don't look for like one app you come up with, and we are looking for a platform of technology that can address a variety of infrastructure issues, right? That's one. 2, we're looking for a company that's in the A round stage but wants to go global early. Because right now, as you know, the mantra in Silicon Valley is that if you're not global from early stage, you will never be a billion-dollar company, right? So everybody wants to go global early, but if it costs money to go global early, and if you raise that money, it dilutes you very early. So with us, we already have partners based in Asia. We know the market, so we can get them sort of wholesale contracts much earlier. So that's our game, and that's why we get into deals that normally, a new VC would never get into. So that's the number 2, and then number 3 is number 3 is really that it's a company that's focused squarely on infrastructure. So we try to be very, very focused in the space which we know.
So y'all do cross-border really initially and y'all exit in the valley?
No, we invest in the valley, and the companies in the valley are the ones who are interested in expanding in Asia and other emerging markets. So we will invest in the U.S. Okay, I think I should stop before I get in trouble. I'll be here, happy to answer any questions afterwards. Thank you.
Excellent, fantastic. Okay, guys, so it is lunch. So feel free to go and have it. We are going to reconvene in approximately an hour and 15 minutes, which is going to be around about 5 to 10 past 2. And look forward to seeing you then. Thank you.